Hey, what's up guys, John here. While the world was distracted with Thanksgiving, a lot happened inside of the banking system. You're having tons of bank branches close. You're having HSBC having issues overseas.
Thousands of customers across the UK reported they are unable to access mobile banking on Black Friday.
You're having UBS. You're having all of these situations happening right over here while everyone's focused on travel, spending time with family and everything else. But look at what's happening with our banking system. It's going to give you a clear picture of where we're going in 2024 and what you should do to prepare and position yourself in accordance with facts, what's actually happening. Because this is pretty unreal. I mean, look at this. HSBC, customers furious that they're down for 24 hours. This came out November 25th. Today is the 27th. That same exact day, so 2 days ago, HSBC is facing a hit of more than $6.3 billion as a result of unsecured commercial property loans in China. So the same day they're taking a $6.3 billion loss, customers are having issues getting access to their funds. Weird. Then you have UBS. UBS came out on the 22nd saying that a private buyer's preferred in an outcome case of a rescue. UBS purchased Credit Suisse 5 months ago, as Credit Suisse failed. Now there's a rumor going online of a letter going out from UBS to their customers saying, they can't get access to their funds. You're looking at all these situations, and earlier this month, you had a lot of banks in America, not Bank of America, even though that's one of them, banks in America. So you have US Bank, Wells Fargo, Chase Bank, Bank of America, you have all these banks where customers couldn't get access to their deposits on direct deposit day on Friday, right?
Customers at some major banks might be wondering today, where's my money? Bank of America sent out an alert. There were also reports of problems with Chase, US Bank, and Wells Fargo.
So when they were trying to get their paycheck on Friday, they couldn't get access to their money. What are the odds, right? What are the odds? Then you have Barclays, November 24th, right on Thanksgiving, Thanksgiving break. Barclays Bank reporting to axe up to 2,000 jobs in part of a $1.25 billion cost-cutting plan. You have to ask yourself, what are the odds, right? Banks are going through a massive restructuring, a massive consolidation, and a lot is going to change. And I'm going to break it down for you. I'm going to show you what's going on in this video. So please hit the like button, YouTube will share this content to educate more people about what's happening in America and the world. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So you have Citigroup, right? Citigroup's laying off 10% of the workforce. Of 240,000 employees, 24,000 jobs gone. Substantial, right? Now look at what happened between November 12th and the 18th. Several banks filed to close branch locations, with PNC Bank with the most filings. According to data from the U.S. Office of Comptroller of the Currency, Pittsburgh-based PNC Bank filed for 19 branch closures, 5 in Pennsylvania, 4 in Illinois, 3 in Texas, 2 each in Alabama and New Jersey, and 1 each in Indiana, Ohio, and Florida. JPMorgan Chase filed closely with 18 filings, right? Ohio, you have 3 in Ohio, 2 in Connecticut and South Carolina, and 1 each in 11 states, including New York, Illinois, Florida, and Massachusetts. Citizens Bank, you have to remember, Citizens Bank, Iowa, they closed a branch. It was a bank failure. This was 3 weeks ago, right? This is a third, with 8 branch closures, 6 in New York, 1 in Massachusetts, Delaware, Minneapolis-based U.S. Bank filed for 7 closures, 3 in Tennessee, 1 each in Missouri, Wisconsin, Illinois, and Ohio. Then you have Bank of America, 5 filings. Citibank filed for 2 more branches, right? You have all these banks closing. Why are they doing this? Well, it's because they're looking at the writing on the wall. The easy money, that easy monetary policy that's been, holding this economy together over the last couple of years is over. It's over, right? And so what's happening now? They're seeing shrinking deposits and massive losses on a lot of the loans in which they're issuing. And so what are they going to do? They're going to cut costs, and they're going to do it in a very, very big way. They're going to be doing M&A, mergers and acquisitions. They're going to really start to, probably a handful of banks are going to start to really run things in the next couple of years. And so you're going to start seeing a lot of banks start to consolidate. And with that, a lot of brick and mortar retail, face-to-face, local banks are going to start closing up shop in ways in which we haven't seen before. So almost all loans are bad. Why banks aren't lending, right? Almost all loans are bad. Look at this. A massive 63% of all mortgages outstanding 63% were issued after 2018. As the Fed effectively lowered rates to zero overnight in March 2020, Americans moved quickly. Outstanding mortgages prior to 2018 were refinanced and investor purchases skyrocketed. Now millions of Americans are sitting on mortgages that are less than half of the current mortgage rate. Housing supply is not coming back anytime soon. Well, unless you start to see massive job layoffs, unless you start to see some really big changes in the economy, people can't afford the increased insurance and taxes and upkeep on their properties, and they're forced to downsize. And that could be something that will have a big impact, but we will see. But you look at this, 63% of all mortgages outstanding issued after 2018. How many people are out there looking to buy homes today? Probably not that many, right? Now look at the state of the U.S. consumer. Federal Reserve Bank of New York. This came out November 7th. Credit card delinquency continued to rise. Who's missing payments? You start to look at this chart here. The share of newly delinquent credit card payments rose in the third quarter and exceeds the pre-pandemic average, right? So you're starting to see this trend. Then look here. Millennial credit card delinquencies exceed pre-pandemic levels, while baby boomers, Generation X and Generation Z are at or near their 2019 averages, right? Then delinquency rates are rising fast for lower income areas, but each income quartile area has rates at or above their 2019 levels. So you're starting to see all of the writing on the wall. Those with the largest credit card balances were the most likely to fall behind, but made up a small share of credit card users. You're seeing it. You're seeing it. And so banks are seeing this too. And they're saying, okay, well, how do we stay in business if we're sitting on a lot of bad loans? Our customers aren't paying us back like they used to. They don't have the deposits in the bank, and we're sitting on a lot of problems, just like Silicon Valley, right? Just like Silicon Valley Bank. When that went under, that bank issued a lot of withdrawals in the course of 72 hours, so much so that they were forced to go under. And so when you're looking at what's happening here, the amount of debt that consumers have, and what banks are doing, big bank lending to small business slides, companies look elsewhere, it's very fascinating. It's very, very, very revealing that banks are going to walk into a world of problems. And consumers are realizing it. They're in a situation right now, many consumers, where they can't get access to credit like they could have a year ago, 2 years ago, 3 years ago. And so what are they doing? Many of them are leaning on buy now, pay later. They're trying to borrow money even for groceries, right? And so look at this. Credit card debt hits record $1.08 trillion. It's absolutely incredible. Look at this. Breaking. Buy now, pay later spending soars 20% compared to last year on Black Friday. It is also expected to jump 19% on Cyber Monday to a record 782 million. As excess savings in the U.S. have gone from $2 trillion to zero, Americans are relying on debt more than ever. In other words, deals that are 20% off are being financed with credit card debt that has a 30% interest rate. I mean, this is the new normal, right? This is the new America. Now, what I think is going to happen, American spending has kept the economy going since the pandemic and maybe finally stopping in charts. What I think is going to happen is I believe banks are going to continue to tighten up lending dramatically in Q1 of Q2 of 2024, no doubt about it. Student loans are going to have a very, very big impact on this. We're going to start seeing some people trying to pay their student loans, some people not. Some people not able to pay any bills. Some people are going to choose to pay certain entities and companies and others not, right? So what's ultimately going to happen? You're going to start seeing more and more and more losses held by lenders. And with that, they're going to start looking at risk differently. Now, what I think is going to happen is we're going to see an opportunity for investors, for entrepreneurs, for business owners, for Americans to go out there and to make smart decisions, maybe to buy a work truck. Maybe they're looking to expand as some of their competitors go out of business. Maybe it is to start a small business. Maybe it's to buy a business. Maybe it's to invest in distressed real estate. Whatever it may be, it's going to get a little bit harder to do it. But if you do it, you're going to be able to build out a moat, a competitive advantage around you, because not many other people are going to be able to go out there and make moves. A lot of people are going to be in defensive mode. Just like in 2008, 2009, 2010, what happened? People got scared. They let emotion take over logic. And those that were able to see the value, they were able to go out there and make really, really smart decisions. Those are the people that got rich. Those are the people that really, they built a name for themselves. They built a lot of wealth for themselves and their family. Now, I think we're going to see a lot of fear in 2024 and 2025, and that shouldn't be there to discourage you. But that should definitely be there as an indicator that the next couple of years are going to be extremely important to build real wealth And you're going to want to do that strategically with a really, really good game plan, a good business. You're going to want to get out of high interest rate consumer credit card debt and put yourself in the right place to where if you were a bank, you would want to lend you money. What do you think about this situation? Do you think we're going to see more bank failures? Do you think we're going to start seeing lending contract over the next year or so? I do. I'm curious what you think. If you want to fix your credit to position yourself for what I think is going to be the greatest investing opportunity in American history, you're going to need great credit. We'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. You can click the link in the description just below this video, schedule a free strategy session. We'd love to help you, and see you in the next video.